Good afternoon again, everyone. I'm Bag of Dawn at Stock Market Caddy. And just a few moments ago, we published a video looking at a very traditional chart of the SPY, the SPY, on a candle chart, a daily chart, something that everybody will be doing. And I encourage you to take a peek at that. Now we're back again, and we're looking at the S&P. This time, we're going to look at the S&P through the eyes of the futures contract. This market, the futures, is a leveraged market. It's where the banks play, and we do think that the futures act a little bit, just a little bit earlier than the traditional markets. This particular chart, a Renko, is what we call a price-based chart. It is not time dependent. The earlier video, a daily candle, is time dependent. So this really takes out any of the distortions, or does take out the distortions of time. Time is not relevant here. So let me give you a peek at what you're looking at and what we had said. If you go back in our Twitter stream or our Google video stream, you'll see this very same chart when we were making this move off of the lows, this move here. These little green dots are the C points, and they're buy points. Buy, buy, little sell, then a buy, and a buy, and a buy, and a buy, and a buy. In fact, this video, or the video that we had made when we last looked at this chart, was back on August 15th. And we said then that this was very unusual to have 6 or more C points in a row on a Renko chart of this size. By the way, it's 17 points a brick. How did we arrive at that? We used one of our algos. Renkos are beautiful, but if you don't size them properly, they can be either too noisy or they can be just too large. You don't get to see the detail. In that video that we made on August 15th, we said up in this neck of the woods that we would be waiting for the price action to do what? To give us a C point on the way down, which was right up here. You see that little red dot? That is a C point down. This is a C point down, and another C point down. This was our cue. This would have been your cue to get ready for the move down. Now you can see we have superimposed some Fibonacci retracement and Fibonacci extension. So let me see if I can move this chart for us without disturbing that. Bear with me. Let me try to do this here. We'll bring this up. Okay, so this move up here at 46.15 was the high established earlier this year, the obvious high. Down here at about 36.40, give or take a point or two, this was the obvious low. We had drawn Fibonacci retracements from here to here to get some idea where the 50% retracement would have been, which was at 41.28, but more importantly, the 618, 42.43. And where did we begin to pause? Right up here at 42.43. This move down did something that is very natural. It countered, doesn't quite get back up to the top, and as it gets up in here, all the people and all the institutions and all the hedge funds who bought up here, guess what? They want their money back. And what do they usually do? They sell. And now we're headed back down. In a larger context, if this is the A point, the obvious A point at 46.15, and this is 36.40, the B point, and if this is the C point at 43.11, give or take, we could see a move of 1,000 points or more down here. And let's see if we can slide this over without disturbing. I can't seem to move our charts, so let me just bring these in. We bring this down. This is about 3,300, about 2,900, and very possible that we see 2,700. It's possible, but we are headed back down. This tool here is not the MACD. This is our momentum indicator called the SMC, Stock Market Caddy GPS, near indicator. And this told us when we were above, we had nice momentum on the way up, and we most certainly did. But as we were going up, you could see the momentum was waning. In fact, in that video on August 15th, I used that very word. I said the momentum, the price momentum, is waning, and we were putting on our insurance contracts against or to profit from a market turn down. Now the market momentum is to the negative. It is stormy outside, and it could get a lot worse. So we don't anticipate a rapid turnaround. In fact, some of these areas that it's breaking now, former support, that was some support here. As we come down, we bounce and then break it. Former support will become resistance. As you're going up, it is a preferable technique to be doing what? Buying the dips. Buy the dip, buy the dip, buy the dip, buy the dip. But when the market makes a move down and is headed down, you don't want to be buying the dips. You want to be doing what? Selling the rips. And most important, you want to be patient, you want to be disciplined, and most important, you want to get an education from somebody. And if you want to visit stockmarketcaddy.com, feel free. If you want to give us a call at 813-758-8263. Now, you may not realize, but there is a little program. See this little buy here and a short here and a short, buy here and a short. Doesn't get them all right, but there was a little short signal. See that little arrow right there, right there. See it? That is a program that is running. Let me show you what the performance report looks like. If you had taken every single trade over the last year, this is very much what your equity curve would have looked like. Could you have done better? Yes. Could you have done worse? Yes, if you do not have any acquired skill. But we have folks that do have acquired skill. They work on it every single day. They're very disciplined. They're very passionate. They're very patient. They're mature traders. And they're constantly learning. And they're diversified not just in the markets that they trade. They're diversified in how they trade, in what they trade. There's a lot of work that goes into that. And not everyone should be a trader. And not everyone is prepared to do that work. Our members are. And if that interests you, I'm happy to talk with you. If you do decide to go into what we call the Q School, I promise you one thing. I will work harder to convey what I feel we need to convey on how we approach the markets than you. I promise to give you that for 3 full weeks. You'll be in touch with me every single day to the extent that you have time. Not many people are willing to do that. 813-758-8263. Have a great week. I'm Bagadon, and this has been Stock Market Caddy, looking at the ES futures contract on a Renko chart.